Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES broke out above the recent highs, and at this point, heading into the open, we're going to be watching to see whether there is sufficient underlying strength and whether this breakout is going to hold. So in order for the breakout to sustain, we need to see buyers holding ES above the 83 to 85 area. That essentially encapsulates the recent RTH highs. So if we are holding above it, it serves as a confirmation that the breakout is intact, and from there we can go up and quite easily test 88.75 to 90.75, and if there is enough upside momentum, then even make a new all-time high. A failure at 83 to 85 would mark a failed overnight breakout attempt and would drop us right back into the recent balance. It doesn't mean that the bias would immediately go bearish, but it would signal short-term weakness or at least short-term lack of strength and a failed breakout. Now, depending on the real-time situation, we may still attract buyers at the previous VPOC of 80.5 or the 77.5 high volume node, or 72.5 to 75, which is the bottom of the recent just 2 to 3 day balance here. So that's something we'll have to figure out in real time to see whether there is sufficient weakness for the market to head lower, because a failure at 83 to 85, like I said, would just drop us back into the recent balance, and it doesn't mean that now the sellers are in control. It would leave us with a very neutral bias, and we could just continue balancing within a range. But if ES can hold above 83 to 85, which we're going to be using as the micro bull bear zone, then it's a confirmation that the breakout's intact. We know that we're running in a lower volatility and lower volume market, so patterns can take longer to develop, and overall the price action can be slower. But the breakout would remain intact above 83 to 85, and from there, like I said, we can quite easily head up to 88.75 to 90.75, even set a marginal new all-time high. And in the event of a pickup in volume, we could hit 94 to 96, which would mark a short-term range extreme. So 94 to 96 can actually cap the upside, not because there's any hard resistance over there, but mainly because looking at the recent volatility, the range would be exhausted by the time ES got into 94 to 96. The more likely scenario is that we set a marginal new high and perhaps don't even reach 94 to 96, just given the recent low volatility. If you are watching the other markets, then we want to see the Russell holding above 39 to 40. That would tell us that the breakout in that market is intact, at least on the smaller time frames here. And then if it can break beyond 1243, then that would serve as a confirmation that this is turning into a proper breakout, and from there it would just support the upside move in the S&P, which could then make a marginal all-time high. So by default, our bias is going to be bullish above the 83 to 85 micro bull bear. Overall, we're still maintaining that short-term neutral bias because we now need to see this breakout attempt hold. And by default, we're giving edge to buyers, but we do need to see that underlying momentum and the breakout in the other markets sustain as well. And if that fails to happen, then we need to adjust our intraday bias and trade accordingly. So from there, we'll have to just monitor the situation in real time, see whether it's simply a lack of strength, which means we're just going to be probably balancing again, or is the failed breakout attempt resolving into some real weakness in the market. So by default, like I said, we are going to give edge to the buy side, and if we're holding 83 to 85, we know that buyers are dominant, and from there we can go into initial resistance quite easily. The challenge with this market is that there may not be much left in the move, so the upside potential from here is questionable because, like I said, we might only make a marginal high around 91, 92, or at the most push into 94, 96, which makes it difficult because the reward to risk is quite questionable. So if you can't locate a high quality, good risk reward trade setup, then it's still going to be better to be selective and not get overly aggressive in this low volume, low volatility market. But the focus is going to be on long side above 83 to 85. We're going to be cautious on the short side because even though 90.75 is the all-time high, we can quite easily probe above there and then perhaps start to develop another little sideways range. So that's the view heading into the open. Let's see if buyers can hold ES above 83 to 85. That'll help set the bias and tone on the day, and we'll take it from there.